Hey, what's going on, guys? Bob Mentality here, and today I want to talk to you a little bit about selling put premium and how I go about doing that, what my thoughts are when going through the process, and I'll just, at the same time, just kind of review one of the trades I took this week, and yeah, that's about it. It's going to be a pretty quick video, more than likely, but I do say that every video, and it ends up being, long like the last one. But all right, so let me show you. So this trade was on SPCE. Space. I'm just going to zoom out on it on the weekly. You can see it's had an insane move in 2020 and an insane move in 2021 so far. Okay, you can go look up the due diligence all behind this, the fundamentals as to why it's been shooting up so quick. I'm going to be completely transparent with you. I have absolutely no idea. I don't really care. I focused mainly on technicals for this. I've heard of the sticker and have glanced at it a few times before, but when you zoom in a little bit, go on the 180 day, okay, you can see we've been in a consistent uptrend with a ton of volatility. Okay, when you see volatility like this, that's why the options are priced so high. That's why you can get so much premium for selling puts, or that's why you'll have to pay so much to buy a put or a call because of that implied volatility, right? So what I saw earlier this week, I took the trade on the 10th on this pullback day. I'm going to zoom in just so you can see what I saw on this day, right? Is right here, okay? We had a strong uptrend, sideways consolidation just below all-time highs, right, at the 62.90, horizontal consolidation, and then this pullback. Okay, if you see just this, you see horizontal consolidation, it's not a great time to look to sell put side premium. The reason for that is because the implied volatility will have slowed down a little bit in this wedge pattern, and you're not going to get the best deal on the puts. The puts will be fairly cheap. A lot of people are thinking this is going to break up. They're not going to be priced really high. People aren't too fearful for the downside. However, when you skip ahead a little bit here, let me see if I can do this candle by candle. All right. Boom. You see that downside. When you see this downside move, you're going to see that put premium spike up, which is where you're going to get paid the most for taking on that risk to sell puts, right? Similar to how when a stock moves to the upside, that's when you have the highest risk reward for shorting. Like when these popped up, you're going to have a higher risk reward to take the short position up here. Similarly, if you have a bullish bias, when you get a pullback, that's the highest risk reward for the long idea, right? So when you're selling premium on the put side, you want to sell when you get that significant pullback. That's the first thing I do is I look for the pullback. The second thing I do when I'm looking to sell puts is I'm looking for prior demand. So if you want to just zoom out from a technical perspective, now keep in mind, this is a very parabolic chart. So when I say demand, I'm not talking about multiple year demand. I'm talking about the past couple days, maybe the past week or two, right? What's short-term demand, okay? I can tell you for a fact, if we go take this horizontal line, throw that thing right there on 50, what you're going to find is as the price was moving up here, we had a lot of trouble staying over 50. We finally broke through it. We managed to hold it as a magnet level, stay above it here. Every time it pulled back in towards 50, it was bought. See that? And so 50 also is just a big psychological level, not just a technical support level, but a psychological level, because people think 50, it's easy to calculate mentally. They can easily calculate their profit or loss. And a lot of people will set orders around 50, either to buy, to short, etc. So it's a nice whole $half mark there. $50 is technical and psychological demand. So just down to the trade, it was a weekly trade. That's why the options premium was fairly cheap. So I sold here on the 10th. I sold for Friday's expiration, which was today. Okay, you see we closed here today at 54.53. When we got this market pullback, I sold the 50 strike puts right where I drew that line for 2 days till expiration. I sold 3 of them. And so what happens is when you're selling these weekly options, these short-term expiration dates, what you're going to find is very quickly the theta decay is going to kill them, right? They're going to decay very quickly. And if the stock moves in your favor, then the premium's going to get hit very hard, which when you're selling premium, that's what you want. You want to sell them for an expensive price and buy them back at a cheaper price, which is what I was able to do in this situation. So on this pullback right here, and I'll just zoom in on the day, the past 5 days, on this pullback here, if you sell your puts here on the 9th, you're going to find they're going to be more expensive. I'm going to pull up the chart. I'm going to show that to you right now. just to help you visualize it. So I'm actually pulling up the options chart for those 50 strike SPCE puts. Okay, look at that. You can even see entry and exit over here. Okay, so if you were to sell the puts here on the 9th, right there into the close, you're selling them for about 40 cents each, right? When we got this huge spike up here in the put premiums, which was this flush right here, you'll see they increase up towards $1.50 very quick, sold back down, but then we're around $1 here for a while before fading off towards 80 cents to the close. That's where I sold these 3 puts, right? So when I sold those 3 at 90 cents each, you multiply that by 100, multiply that by 3, so I collected $270 to sell these puts, okay? Slowly decayed. The next day, we got a huge rip to the upside here. Huge upside confirm, okay? That was because when you see those huge moves to the downside into technical and psychological demand, the chances of you seeing a strong upside move or for that demand to act as support is pretty high, right? Especially when you look at the fact that one of the main reasons I took this trade, if you jump onto the SPY, zoom out on the SPY for the past 20 days, look at this. Uptrend. Every time we pulled back, got soaked. So people were buying it up. Same here, buying it up. So on the 10th, I knew when the reason why SPCE sold off so hard, wasn't because the CEO died or they had a bad press release. It was because the whole market sold off. And I know the whole market has been habitually bullish. So if I get a pullback to prior demand, I'm going to go ahead and take that trade, right? So when you look over here in SPCE, we got the pullback right down in here. We were sitting right on 51, right in this area. I sold those 50 strike puts, bounced right up, closed. Next day, the price ripped to the upside. So if you jump back to my options chart here, I sold these at 90. The next day they got hit. I was able to buy them back for 23 cents. So the profit ended up being $201 is what I collected in pocket out of the potential maximum profit of $270. And if you see, if I would have held these, the price expired, Friday today at, 54.53. So I would have been able to pocket the entire $270. Well, if you ask me, say, Keegan, why did you not just hold the puts until the next day and collect that extra $69? And my answer would be that I took that money and invested it somewhere else and made more money than that $70 that I would have made if I would have just held this position until now. So yeah, but this is nice, a good example so you can see kind of how the premium decay hit really hard on this pop. So this is the kind of stuff I want to talk more about, like the psychology behind it, blending in the technicals and the psychological, talk more about why markets are moving the way they are and why different stocks move the way they are, and maybe just get into some of that more common terminology stuff, because I think that would be insightful to you guys, right? So here's an example. If you had a bullish bias, one way you could make money that was more conservative. Another way could have been just buying the stock. You would have been able to capture this huge move. Your profits aren't limited like they are when you sell puts. You could have bought calls, right? There's so many different ways to make money on the same move. I thought I'd be interested to share this with you guys. So just remember, I'm going to go ahead and wrap the video up here. I don't want it to be too long. Just remember that when you're going to sell puts, I don't recommend selling in consolidation. Sell when you get a pullback and sell at demand or as close to demand as you can get. That's technical and psychological demand. When you sell on a stock pullback, you sell your puts, that's when you get the highest risk reward for that bounce idea to cause decay on your options. And also keep in mind that if you're selling puts, you have a bullish bias. So really, if you're selling puts, the bias is the same as buying calls, right? Or buying stock. However, the advantages of selling premium are a little bit higher since the stock can always go horizontal or go up. And you make money both ways if you're selling premium. Whereas if you buy calls or you buy stock, the price is going to have to go up for you to make money, right? For the most part anyway. I'm not going to talk about implied volatility spikes in this video. So that's pretty much all I got, guys. I just want to talk about that, and I'm going to get out of here. Remember to stay focused and continue to develop that bot mentality, which is the trading mentality, where you learn to eliminate your emotions and trade like a machine, guys. And if any of you are interested in and working with me one-on-one, or joining the chat room, or finding out more, or just having somebody to talk to about this kind of stuff, this doesn't make sense to you, there's information to reach me in the description box below. I recommend you come join our Discord, guys. I am out of here. Deuces.